Believe you can grow to be a millionaire in all 6 aspects of health. That's right, every week we share tips to improve your physical, mental, social, spiritual, intellectual, and of course, your financial health. Today, we are focusing on how to improve your financial health with life coverage. If you have never seen Millionaires Are Made, this is the show built on the fundamental belief that every person you meet knows something you don't, and there's something to be learned from everyone. We here at Millionaires Are Made are on a mission to teach the world how to grow into the healthiest, happiest millionaires in all aspects of life. So, to do that, we went out and got 3 awesome guests to give you 3 awesome tips on how to improve your financial health with life coverage, and in the spirit of authenticity to remove as much bias as possible. We don't talk about tips or their advice before the show, so when they come on and share their advice with you, it's going to be the first time we hear it as well. Super excited to see what we have in store. Audience, this is an interactive show. Please feel free to comment and ask questions. We will answer them live on air. This is a great time. We're going to do our favorite little follower shout out. Thanks for following us so much on Facebook. We have Eve Panagutin. Oof, that was a tough one. Instagram, Empowered Transformation. Thank you for following. TikTok, All Gone Odor Eliminator, and YouTube, Hayden Griffiths. Thank you all so much for following us. Hopefully you'll be shouted out next time if you follow us now. If you want to be a guest on our show, it is so easy. We love having new, fresh guests with tips, and we already know that you have something to share. The link is being dropped right now. Click it, hit become a guest, and come share your knowledge with the world. And if you are going through something tough, I know there's always things going on, and this world is a little crazy right now, but maybe financially you're not there. Maybe spiritually you feel lost. Maybe your social group ain't so strong. If you have a topic that you want us to go and build a show around, just comment and let us know. We will go find 3 awesome guests to give you 3 awesome tips to help you through that part of your life. And if you like what we do, giving out information and sharing knowledge with the world, don't forget to like, subscribe, share, send stars. I think that's all of it, depending on wherever you are watching us. Thank you so much. And a couple things, we've got a free coffee with me if you want to have a little 15-minute session. I'm dropping that link right now. I'd love to talk to you. I save Mondays and Fridays every week to just chat and talk with anyone. Would love to have you on there as well. We did launch our merchandise. We'll drop the link for you there if you want to get some Millionaires Are Made merch. We have some super awesome stuff there. And before we bring out our guests, this show was brought to you by some awesome sponsors. First, we have Veronica Herrera, a life coach and host of the Thrive, Don't Survive podcast. She empowers others with emotional regulation, very, very important in today's world, and tools to transform challenges into thriving successes. What a skill that is to have. Our next sponsor, Kim Groshek, is a 2-time international best-selling author, kudos, and a speaker helping CEOs maximize focus, energy, and health with over 30 years of industry leadership expertise. Next, we have Francine Julin. Francine is a veteran-turned-author, inspiring families to explore mindfulness together. What a powerful tool. Her story and book spark confidence, calm, and connection for kids and parents alike. Connect with Francine to spark calm, confidence, and creativity in your family's life. Her link's being dropped right now. And we have Brian Wright, who, if you want to get your brand in front of high-level entrepreneurs and personal growth leaders, reach out to Brian at Ultimate Achievers Magazine. Brian has been on our show before. He's amazing, super smart guy, helps you write and publish your books, and all sorts of other stuff. Industry icons meet a content-first audience. Go check out Brian right now. And now that we got all that fun stuff out of the way, let's bring out our first guest. Our first guest is Mitzi. Mitzi, who
Hi.
are you?
Hi, I'm Mitzi Diane. I help people with affordable housing. I actually deal with mobile homes. I get single families, single parents, families, all kinds of people who are looking for affordable homes into homes. And then I also provide investors double-digit returns on these investments. And I also use life insurance to help them make more money off their investments.
Ooh, I love it. Oh, man, I got some. Yeah, we'll ask them right now. Do you work in just a certain region, or are you the financer, or are you real estate agent? How do you get people into affordable homes?
I am a real estate agent, but I'm also a mobile home retailer. So what I've been doing is finding mobile homes that are already established in parks or already on land and providing owner finance or rent to own solutions for them with like 3 to 5K down and then mortgages a little bit less than rent so that they can own their own home within like 10 to 7 to 12 years. Um,
Cool.
and I primarily focus in San Antonio area for myself,
Okay.
but
Okay.
for on the life insurance product that can be nationwide.
Awesome. All right. Well, I've got a question about that for you then. If I wanted to improve my financial health with life coverage, what
Mhm.
tiny piece of advice would you give me?
Come to me. No. So there's whole life insurance that there's certain policies that you can put your money into. And then within like a week, you can pull 92% of that premium out, but that money is still considered being in there. It's like a loan you took from your policy. So you're making like 5% on this money. And then you can take that money out and put it into one of my investments that make you like 16 to 24%. So now you're making 21 to 29% return on your money. So that I would recommend that.
All right, let's delve into that. You buy a whole life insurance policy, and
Mhm.
so they're giving you 5% on the money you put in. You make a monthly payment,
Mhm.
you get a 5%. They take that money and they're investing it. Hopefully, for their sake, they're making more than 5%. And then when you die, they pay you out whatever your policy is. So how are we taking that out step by step and putting that into you? And how are your investors investing in you as well?
Well, you can. So right now, I'm getting my life insurance license again. Right now, I'm using a guy named Joe to refer people to at the moment. But I've had it before, and so how it works is basically it's a whole life insurance policy. You shouldn't be doing this with a universal life, but it's 5% usually is right now, but 5% on what you get put in there for, and then you have after a week of it being in there, you can actually pull out a loan on your death benefit with how much you put into the premium. So, like, say you put like 50K in there, you can pull out like 90 to 92% of that to put into something else. But that 50K is still making the 5%.
Even though you pulled it out, it still makes it because it's a part of the life insurance policy.
Mm-hmm. Yeah. So
Fantastic.
it's like the premium's still in there. You just took a loan out. And when you
And then,
die, that loan, you don't ever have to pay that loan back. So you can, that just gets deducted from your death benefit.
right. And then, so Mitzi, and then investing in you yields a 21% return.
Well, like on my lowest amount, like one of my notes right now on these mobile homes that I do, pretty much the investors are the bank on these mobile homes. So right now I have one, and it's only 16. One of the notes is only 16% return. And most of them are more 18, 19%. So it's between 16 and 24% is what the return on investment is for the stuff that I do. So yeah, if you add another 5% to that, so the 16% note, you got it's the note itself is only 12%, but I sell it at a discount to get that 16%. But yeah, you add another 5% on there, you're making 21% off your money.
Very cool. Awesome. All right, Mitzi, we're going to move on to our next guest and we'll bring you out in the round robin. Next up, we have Derek. Derek, tell me, who are you?
Who am I? I am Derek Nelson. I'm out of the Tampa area. I am a former New York native. Um, Moved down here in 2019 with the family. And basically, what I do is I help people maximize current and future savings in the most tax efficient way possible. This allows people to maintain financial peace of mind and also gives them permission to spend their savings in retirement.
All right. Very cool. Well, I've got an interesting question for you, Derek.
Sure.
If I wanted to improve my financial health with life coverage, what tiny piece of advice would you give me?
Tiny piece of advice I would be a lot of people because what they do is when they're putting away from for retirement, it's typically in a vehicle like a 401k, not understanding what the future tax consequences are, and even the current market risks are. So I always suggest using a properly structured whole life plan in order to create a different diversified tax bucket. You have guaranteed growth. It's money you can count on both tomorrow and down the road, way in the future. And so you're going to get growth. You're going to earn dividends on that money. You're never going to have a down year. And guess what? If you pass away unexpectedly, then your loved ones are going to get the money today, what you meant to save over a lifetime.
Fantastic. All right. All right. Derek, where on your life journey did you learn this advice?
Whew. So it certainly has been a journey. I've learned from some of the industry's best, a lot of self-study, self-education, other things, learning the hard way about some other products that were out there early in my career. And I just, listen, we're historically at income tax wise in this country at all-time lows. It really has nowhere to go but up, going down the road.
Wait, what do you mean by that? We're at all-time lows for income tax in this country.
So income taxes for the American public are at all-time lows. For example, you can have a married couple making, let's say, $75,000. If they file jointly, that'll put them in the 12% tax bracket ultimately. If you go back just years and years, we've had taxes, like we've had higher margin taxes as high as, 80, 90%. So where are we at now, right? And not to mention also on top of the low taxes, our deductions are also higher. So a married couple can take about $30,000 of their first $30,000 roughly in earnings and pay zero tax on it.
So everyone should get married.
Deduction. What's that?
So everyone needs to go get married.
For tax purposes, yeah. Just make sure you're in love.
For tax
I'm not
purposes,
a counselor.
Everyone, I'm not a counselor. I'll just tell you the first 30,000.
And it's interesting. It's interesting that comes up because they say there's two things that prevent anybody from becoming. If you're gonna not make it to a millionaire status, there's two things. One is divorce, and the second is auto loan debt. These are the two most common ways that prevent people from becoming millionaires.
Auto loan debt over credit card debt?
Auto loan debt is more significant than credit card debt, and it tends to be lifetime. We finance a car in our 20s, and we continue to do it into our 50s, 60s, and 70s. So we're always carrying that debt for our entire lives.
Because we're always paying a loan on a car.
Always paying, making a payment that, what interest could you be earning rather than paying on that payment? And what's the opportunity cost of all that money going into the vehicle? That's an asset that depreciates.
That's fascinating. Okay, cool. So where on your life journey did you learn this information?
So I've learned it over the course of the last, 20 plus years. I used to be a floor broker on the exchange. I dealt with a lot of mutual fund investors and hedge funds. So I learned a lot about that. Probably didn't know how to spell life insurance back then. And along the way, I just met some fantastic people, people in my industry, giants, Tom Hegna, Van Miller, to name a couple. And I just am constantly educating myself. I've written 3 books on the subject. And my latest one being Retire Max, which is available on Amazon. But it's just try to, educate myself as much as possible. And now I want to share it with as many people as I can.
So we just had a comment saying, dang old predatory lending and auto financing. And,
sure is.
I mean, sometimes they say, credit card debt could be or credit card interest rates can be like 24%. And, if you don't have good credit and you're trying to buy a car, I've seen auto rates right up there at 24% too. What
people don't realize about auto loans is that, let's say you had an auto loan at 6 or 7% and you financed it over 6 years. And if you're paying that type of interest rate, because it's not like a credit card where your payments go down because your balance goes down. The auto loans are structured more like a mortgage. So The reality is, if you do the math, you may be paying 20 to 25% more than what the car was the original purchase price, thus making your real interest rate closer to 20%.
Yeah, and that's a good point too, because like a mortgage, a lot of the first half of the payments you're paying just the
Right.
interest, and then you finally start paying the principal in the end. And I'm almost certain the car loans are structured
They're
the same way
structured
with
the
the
same.
amortization schedule.
Whether you're on your first or your last payment, the payment's exactly the same.
Right. And so that's a good point, Tyler. Yeah, there is a lot of predatory lending, and one thing I've also heard is from lenders that lending on a house is actually safer than a car because you know where the house is, and if you need to go, repo the house, it ain't moving. But a car, you actually usually have to have a better credit, and it's more risk because you can take the car wherever and take it. So
Good point.
fascinating. So that's a big tip, everyone. Go check your car loans and maybe start listening to Dave Ramsey, if it's Ramsey, and paying cash for your next car, and get a $5,000 junker, and that's the life you live for a little bit. Awesome. Thank you
My
so
pleasure.
much, Derek. We're going to move on to our next guest. Her name is Jennifer. Jennifer, tell us, who are you?
Hi, thanks, Austin. I'm Jennifer Lachardy. I help women escape from corporate or their 9 to 5 so they can build the business they were made for. And at the same time, come home to themselves without the hustle, without the burnout, so they can step fully into their mission. And this is where like financial health is so important. You have to look at all aspects of your life.
Very true. Very true. Pay off the car. Jennifer, if I wanted to improve my financial health with life coverage, what piece of advice would you give me?
So I had life insurance through corporate, not even thinking about it for all these years. And I have learned what Mitzi was talking about too, that you can borrow from the policy. But it's really about, especially when you're an entrepreneur, going in there and understanding all aspects of your life, including the financial piece, being able to look at it and understand how important it is to have life insurance. You never know what's going to happen in your life. You're planning for your future. And like I was talking about with credit card debt, like that's something too to focus on. But just being aware of all your circumstances, understanding and looking at the best options for yourself to have the best financial health possible.
Love it. Love it. Where on your life journey did you learn this advice, Jennifer?
I learned it on my entrepreneurial journey as I had to learn certain things and look at, okay, what is most important? Are you putting the money in the 401k? Are you like aware of your balances and everything? Because when you're investing and building and growing a business, it can get expensive and you have to really be clear on what you're doing. And then looking at those policies too, like Mitzi was talking about, being able to save. I've learned about that as well, being able to pull and borrow money from it. So just being well aware of everything that's out there and making the best decision for you.
And I will add on that one of the rarest things is being a closer friend to your future self
Yes.
than you might be. A lot of difference between people that are broke and living paycheck to paycheck and hurting, and people that are well off is just short term versus long term thinking about your decisions.
Yeah, make the decisions that are right for your future self. Really being able to connect to that. And you can step into that energy and that version of yourself so much faster when you, like I say, don't bury your head in the sand and you actually look at what's out there and you make smart decisions.
Yeah, and it's a good point you're making too. It's almost like we were just talking about with paying the car. Some you might have to do sacrifices in your
Yeah.
present life, and live a little under your means. I actually just Gary Vee just had a little speech about how everyone would be 10 times happier if they just lived under their means, and let their means grow slowly, whatever, whatever. But it's a good point that you're bringing up for your whole life. You got 60 years of financial health to worry about, and you're worried about what kind of car you drive right now. Fascinating, fascinating points. Cool. We're gonna bring everyone out and talk about each other's tip. You ready for that,
Yes.
Jennifer? Great. Let's bring Mitzi and Derek back out. Audience, this is a great time to ask questions and comments. and we'll answer them live. Let's start with Mitzi. Can you quickly refresh what your tip was for us?
Get into the whole life insurance policy that you can pull out of.
Fantastic. This is also known as infinite banking, which is a very fun topic. I think we tried to do a show on it, but it's too abstract. But maybe in the next couple of shows we'll do it.
Actually, Private Club is a really great thing for people to check out. They talk about it a lot. PrivateMoneyClub.com with Chris Nagel.
Let me say that again.
PrivateMoneyClub.com with Chris Nagel.
Okay.
He talks about this and really breaks it down for everyone.
Nice. Yeah, infinite banking is awesome. It literally just hit up my insurance broker. I was like, where am I at with that? I haven't checked on that in a few months. Let's find out. Derek, what are your thoughts on Mitzi's tip?
I like it, given the right circumstances. What's nice is when you're taking loans out against your policy in a properly structured whole life plan, there's really no cost at the end of the day. So you're essentially keeping that money flowing. What would you rather do? Would you rather take a loan and pay yourself back and continue to earn interest and dividends on that money? Or would you rather give it to a lender and it's gone forever?
So let's try to clear this up for some people that may not know what we're talking about. All right. So this strategy is called infinite banking. Essentially, you buy a life insurance policy. Obviously, Mitzi and Derek are experts in which types. There's certain types. Anybody recommend term life insurance? We'll get to that in a second. So there's certain types of insurance that this works for. So you have this insurance, say it's $1 million policy. So when you die, you get $1 million. Every month, say it's $250. Let's just say $500 to keep it easy. So you pay $500 into this to make sure that this policy works. So that's how a general life insurance policy works. So now what happens is you build up this amount of money you've paid into it. Say you're at $20,000 after, what is that, like 4 years, something like that. So now you can take a loan out against that policy because you have it there, and you can take this loan out to yourself, and you can use that to invest in other things. Or if you want to be foolish, you can just buy a $20,000 car for no reason at all and keep paying more auto loan debt. Is there any clearer way to say that, Mitzi and Derek?
No, that's pretty good. And you don't have to make payments into it. You can put a premium. Let's say that you were going to make an investment of $50,000 or even buy a car that's $50,000. Put that into the life insurance and then, wait a week or two, get it pulled out and then buy the car in cash instead of having the car payment. And you're still making 5% on that money that you just bought that car in cash. But yeah, you can put a lump sum in there too and pull the money out more faster.
Okay, so lump sum to buy your insurance, to pay down your insurance policy, essentially. Jennifer, any thoughts on Mitzi's tip?
I think it's a great
How
tip
well versed are you?
because the other options are, if you're borrowing, some people borrow from their retirement. And if you're doing that, then you get hit with penalties. And then you're paying taxes and all of that. So there's a lot of benefits to what she's suggesting.
All right, we got a question from our audience. And so I am not a life insurance expert outside of infinite banking. Tyler says, does anybody recommend term life insurance? So what are the pros and cons of term life insurance? Who wants to take that?
Take it. So I absolutely recommend term insurance. I recommend it to my clients, and I have some, especially for families just getting started. It's an affordable way to beef up the life insurance because the younger you are, the more insurance you need because the more your income earning potential is. But pros and cons are upfront, you can get more benefit for less money. But ultimately, term insurance is the most expensive type of insurance. And the reason I say that is it's a use it or lose it, right? So if you take out, for example, a 20-year term, and let's just say you're paying $100 a month, that's money out the window if you don't pass away, of course, right? And by the way, only roughly have for every 100 term policies that are active, less than 2 of them will pay a death claim. We tend to outlive the policies. I always call it Murphy's Law. If you don't have it, that's when something happens, of course. If you do elect to go for a term insurance policy, one key component could be make sure it's convertible to something like a whole life. Because what that means is I could have taken out a term 5-10 years ago. If it's convertible, I've already passed the medical. So to just be based on my age. So I can literally, don't strike me down, have a heart attack right now. I survive. I can turn around in 3 months and say, hey, I want to make more of that term my permanent. And they won't ask me any medical questions. So convertibility is very important, I believe, when it comes to term insurance.
Fascinating. That's a good point. Anybody want to add anything to that?
I would have said the same thing as Tyler. I have term and had it too, because when I was younger, I couldn't afford much. So it is cheaper when you consider that compared to whole life. So I was paying like $17 a month for a $400,000 benefit, and I only did it for 20 years because it was like, I just want to cover my kids. If I die while they're still younger, I want them taken care of.
Valid. That's a good point. That's a good use of it. The important years, and that once they're grown up, it's like whatever. Derek, can you quickly refresh what your tip was for us?
My tip would be to I recommend to all my clients, and really anybody I speak to, that they do consider a properly structured cash value life insurance plan like a whole life. It's an alternative savings bucket, right? It's diversifying your assets. When we have all our money in 401k money, for example, okay, not only is there no access without penalties, but you have to pay taxes on those dollars, as Jennifer mentioned earlier. Where it comes, you're also doing two things. We think we're diversified because we have 6 different mutual funds in that 401k. However, when there's systematic losses, which is fancy for market losses, everything goes down, right? So you have stock market risk and you have tax risk. You are saving a few dollars in taxes today with the 401k to pay at an undetermined rate down the road. So you might save 10% of whatever you contributed, which is what? So if you contributed $5,000, you're going to save $500. Well, that $500 savings today could be a $2,500 cost in retirement when you're on a fixed income. So I'm not saying don't take the match in a 401k, just don't contribute above and beyond that. Find an alternative class. Whole life insurance, if properly structured, will grow systematically, guaranteed growth plus dividends, and you have full access to that money if and when you need it. And then in retirement, you can set yourself up with the tax-exempt nest egg.
Fascinating. Cool. All right, Jennifer, what are your thoughts on Mitzi and Derek and whole life insurance?
Yeah. So with what Derek was just saying, I was just thinking that I used to max out my 401k every year in corporate. Like you take the match back in those days, but that's what I did for like close to 20 years before I left, because that seemed to be the best option. But I've learned like there's so many other ways and options. And it's all about, like with my tip, is not burying your head in the sand, like really learning and seeing what's out there, making the best choices for you. And like we were talking about, Austin, your future self. What is going to be best for your future self as opposed to this very moment?
And on that note, then it comes to some people just don't care that much. They're like, all right, my employer has a 401k, cool, that's my future. I don't want to research it. I'm happy at my job. I'm working. I'm living my life. I don't care that much about money. And that's totally cool too. And then there's, people like us that are like, I want to investigate all the 14,000 ways to do this and see which one works out. And so there's pros and cons to both. Sometimes a 401k is cool. Like it does save, it does help for your future. And it's a way that you can put money away and, not be screwed hard when you're older. Is it the best way? Probably not the best for everyone, but just that peace of mind, knowing that it goes away, not worrying about it. It is what it is. Mitzi, what are your thoughts on Derek's tip?
I think it's a great tip. I'm all for diversification. I was in finance for 10 years, and I definitely I like what he had to say about that. I think everybody should do that.
Yeah, I think I'm kind of in the same boat. I have investments, virtually everything, and I think that's the way to do it. Yeah. All right, Jennifer, can you refresh what your tip was with us?
Yeah, not burying your head in the sand, really understanding everything and choosing the best option, what is going to ultimately be right for your future self, because you can move in that direction faster when you make those smart decisions. For years, I buried my head in the sand. Like I took care of my 401k, but I didn't learn everything. I was afraid of like putting it in risky investments, losing too much because I saw people lose. And but when you really understand everything and you care to take the time to, then you're educated. Then you are acting like your future self.
I love it. Derek, what are your thoughts on Jennifer's tip?
I think it's great. I mean, at the end of the day, we need to take care of ourselves, right? And I like the. I was just reading something on that today. It's like, short-term gratification, pleasure today could lead to hell tomorrow. So how do we balance that out, right, for the long term? So we got to, you have to live your life, but you have to balance it to where your future self will thank you. And I think Jennifer hit home with that one.
Agree. Missy, what are your thoughts on Jennifer's tip?
Oh, I love it. I'm loving everything she's standing for on making sure you know what you're doing, and the women, and I agree with that too. I think you have really amazing people on the show.
Awesome, guys. Well, it's at that point in the show where we need to come up with our daily challenge. So we need to come up with a task or series of tasks that takes less than 5 minutes a day, costs $0, and is available to anyone in the world from Kathmandu to Kamchatka. What thoughts do you guys have?
I may have misunderstood the question.
We need to come up with a task or series of tasks that takes less than 5 minutes a day, costs $0, is available to anyone in the world in order to improve our financial health with life coverage.
I mean, I would start with meditation.
Yeah,
Clear your mind, calm yourself, and I need to do more of it.
Mm-hmm. Yeah, I think understanding what your goal is, your end goal, and what kind of life that you want to live, and who you are as a person, and then the meditation, having good boundaries, all of that. And maybe I think that was 5.
I would say, like, pay attention to what is in your bank account. Pay attention to where your money's going. Pay attention to, like, what are you investing your time and energy in? All of it is so important.
What about so yeah, Jennifer, let's build on that. So what about every day you check one of your investment accounts? I mean, you should be looking at them more often, right?
Absolutely.
So maybe you check your 401k, or maybe you check your Roth, or maybe, and if you don't have 7 different accounts, then maybe we look into opening a new one. I mean, we all agree you should have at least 7 different investments. I think that that's accurate, right? Even if you're just doing a 401k, an IRA, stock, crypto. I mean, you should have a bank account, maybe a savings account in there.
Yeah, that's a good
Okay,
tip.
we got 5. Okay, so let's spend every day. Let's at least look into one account you have. Look at one financial account of yours and review it. Right, so at least get everyone looking at their accounts. Some people may not check their investment accounts ever.
Yeah.
They may just be putting it in their 401k and never even looking at it. And so then let's also investigate a new investment stream. I mean, we're talking under 5 minutes. I guess just like at least learn a little bit. Learn a new investment tool of your choice. At least, I mean, if you don't have a 401k, you can go learn what that is. If you don't have a Roth IRA, you can go learn what that is. If you don't have stocks or index funds, treasuries, I mean, I guess there are thousands of different things you can invest in, realistically.
Could I make another recommendation? Check out trust and self-directed IRAs too. And
self-directed, yeah. So, I mean, options would be like IRAs, Roth, self-directed.
And then I used to tell my clients, use the shoebox. I called it the shoebox method, but write down everything you spend your money on every day and get a receipt and put it in that shoebox at the end of the month, put it together and figure out where your money's really going.
Yeah.
Yeah, and it's also about having a relationship with money. So if
Mhm.
you're not paying attention to what's going on with it and you're just used to it being there, that means you don't have a relationship, good or bad, with money. But if you pay attention to and you're grateful and you're grateful that you have the money to spend, you're going to have more money because money goes where it's appreciated.
That's true. Where your energy goes, money
Yes.
flows. Awesome, guys. Well, thank you so much. We're going to wrap it up here. And yeah, thanks for the daily challenge. And we'll talk to you guys in just a sec. And thank you, audience, for watching another episode of Millionaires Are Made. Today, we talked about financial health and life coverage. We talked a lot about, essentially infinite banking, which is using life insurance as a way to have an asset that you can take loans out against for yourself. You can really do this in almost anywhere. I mean, people do a stock market all the time, stock portfolios, et cetera, et cetera. It's buy, borrow, die, right? You buy a bunch of stocks, have a huge portfolio worth, say $20,000, then you borrow against it and use that to reinvest. Same idea with life insurance. You get a policy worth like $1 million, you build it up, you pull money out and take a loan out against that. So great idea for financial health. If you have any questions, follow our guests, go message them. They love talking to people as well. And our daily challenge today is every day you're going to take a look at one of your financial what did we write? Financial accounts. So whether it's one of your investment accounts, your savings, your bank, your credit card account, whatever it is, go look at it, be familiar with it, make sure it's in good standing. And then that's 2.5 minutes of the 5-minute challenge. The next 2.5 minutes is to go learn about something new, whether you're learning about a self-directed IRA, Roth IRA, treasury bonds, crypto, Forex, whatever it is, spend 2.5 minutes and do a little research. Use ChatGPT to kind of figure out another way you may potentially invest. And with all that